Hey guys, it's a market update. Things are technically a little bit scary right now for Bitcoin in terms of technicals. However, fundamentally, there is a massive shift going on. So I want to contrast those two right now. We're hanging out at major resistance for Bitcoin, seemingly wanting to either bust through this or maybe just get dumped down into the next support level. But fundamentally, we've got this, which is all of the ETF applications taking place like right now and all of the timelines which I want to go through in this video, because we're going to be trading around these timelines for sure in terms of, if Bitcoin is going to either break resistance or not. BlackRock, Fidelity, ARK Invest, all of the others now applying for Bitcoin ETFs, and they seem to have found the issue which previously made the SEC deny all of these applications. They seem to now have this one thing that they've changed, and they're in bed with NASDAQ now to actually go through this. So is that the thing that's going to let the SEC actually approve these? We'll go through that in this video. Bitcoin from a technicals perspective is very scary right now if you're looking to trade it, because it's just hanging out at what I see as the absolutely most major resistance level. Resistance because we're below this, but has been support in previous bull markets. So as you can see here, this level for me, and I've always said this, 30-31K is the flip to where we actually say we are no longer in any sort of bear market or accumulation or anything like that. We're actually going through to the next bull market. You can see that on the long-term chart as well. So the Bitcoin, halving cycle chart that I've drawn here, we're right at this point where I said that that would be a good range for this year, right? We hit the low, we've gone straight up to the high, and now we're just hanging out here. What breaks us through this point? Right, do we wait for the halving or do we break through before that? Well, traders now are obviously taking speculative positions on the fact that these Bitcoin ETFs seem to be something that will actually be accepted by the SEC. At least they are different than before. There's a specific reason for that, which I'll get onto in a second. But for right now, scary to trade this, but really if you're longing here, if you're a short-term trader, it's really because of those ETF applications. So if they go positively, we're going to break through. If they don't, or if they just get kind of pushed out or extended by the SEC, then we may see a bit of a malaise here. But make no mistake, these ETF applications are the thing, not just for Bitcoin, but for the rest of crypto. If the Bitcoin ETF gets approved, then in time, so will an Ethereum ETF, and in time, so will a lot of other L1s, because if Ethereum is a commodity, which it seems to be being carved out as, then there's a specific test that you can pass, and if you pass that, other L1s will be commodities too. So this is a pivotal time for crypto and Bitcoin, and that's why you're seeing kind of, bids in the market this year up into this resistance. If you're a trader, Bybit deposit bonus up to 30K. Check the link in the description for that. If you make a deposit, you can get that deposit bonus. So yeah, check the link in the description. The reason why Bitcoin is bid up right now and at resistance is because of the BlackRock Spot Bitcoin ETF. Now, BlackRock are not going to apply for an ETF in the faint hope that this might get accepted by the SEC. It's almost like they're working with the SEC to understand what do the SEC need to have in terms of market structure in order to allow this spot ETF to actually be accepted. So they've changed things in their application that never happened in any of the previous applications. The big one is this NASDAQ surveillance agreement. And so we'll go through that in a second. However, ARK Invest also have an existing application. They have amended this to bring it basically in line with what BlackRock are doing. They have a decision out on the 13th of August. The SEC can either approve, deny, or extend this for another 90 days. You can see the final deadline for an ARK Invest Bitcoin ETF would be the 10th of Jan 2024. And then we have the halving date on the 25th of March 2024. That would be a rough date. Now, in terms of the iShares, which is BlackRock's decision right there, you can see 23rd of Feb would be the final date. However, there are many dates in between that where it can be accepted, approved, or denied, or extended, right? So the 12th of August, as you can see, would be the first date where you may get some decision from the SEC. Maybe they say, yes, everything is in place, it's time to go ahead. Maybe they extend it out. So there's a lot of hot air right now and a bid under Bitcoin expecting these ETFs. However, as you can see, they may not be accepted until the final deadlines until next year. So that's something to keep in mind if you are looking to maybe trade this narrative short term. If they are accepted, then Bitcoin's going to rocket, but they may hold that back until next year. In any case, the final decisions right here in Jan and Feb 2024, right before the halving, is insane. It's just an insane timeline if you're, kind of a medium to long-term investor. So what exactly is a surveillance sharing agreement? So surveillance sharing is something that the SEC needs to make sure that the products that they allow aren't being manipulated in some way. When considering proposed Bitcoin ETFs, the SEC weighs whether the intended listing, exchange, NASDAQ, New York Stock Exchange, or another entity like SIBO, which is where a few of the ETFs are applied on, can meet certain obligations under the Exchange Act to prevent fraud and manipulation. The exchange can do this by demonstrating it has a comprehensive surveillance sharing agreement with a regulated market of significant size. The securities regulator says such agreements have previously provided the basis for the exchanges that list commodity trust ETPs, which I think with these BlackRock Bitcoin ETF, it would be that, to meet these obligations, and the commission has historically recognized their importance. NASDAQ expects to enter into a surveillance sharing agreement with an operator of a US-based Coinbase spot trading platform. I'm assuming this is Coinbase right here, mainly because BlackRock are invested in Coinbase, BlackRock are invested in Circle, they're all invested in other. This is the market structure that's taking place. Large players are coming in, especially BlackRock, into crypto. Bitcoin ETFs, BlackRock are planning to put most of their products on blockchains and tokenizing them using Circle as US dollar stablecoin, heavily invested in Coinbase. It's all taking place. Everything is the same as before. There's no alternative system. The TradFi guys are coming and taking over. That's just what it is, but that's what the SEC also like. What is definitely clear is that US regulators really do not want Binance anywhere near US markets, and they don't want any of the current centralized crypto players to control the industry. They want BlackRock and Fidelity doing this. That's who they trust, because eventually they are basically all the same in the end. So let's come through to long and short-term cost basis, because this also shows us the part of the market that we're in. So if we concentrate on this red line, this shows us if short-term traders are bullish or bearish, essentially. So if the price is above short-term cost basis, you're seeing short-term traders bid up the price and actually pay up and increase their cost basis. That happens in bull markets. That happens when the market is bullish and expecting prices to rise further in the short term. When the price is below that, that's a bear market, right? You're seeing people essentially sell below their cost basis and get out because they think the price is going even lower. So what we can see in the bear market here is that as the price comes up into the red line and the cost basis, people are taking that as an opportunity to get out at break even or even at a small loss. You can see the cost basis here, people are getting out. However, something changed. Something changed around the FTX blow up. When you had the FTX blow up, you had this, consolidation here, capitulation event from everyone, and then we got the move upwards. We broke through the cost basis, and now we've bounced off of it twice. The market feels like we're going into the new part of the cycle. And so as a long-term investor, just take note. As a short-term investor as well, again, I would be buying dips. It's hard to buy resistance, but if dips come, I think they are to be bought in this market environment. There's also a ton of economic data, some of it contradictory, but a lot of it proving why Bitcoin is seeing this bid underneath it right now. A lot of it forward-looking is showing that economies are weakening. Some of the data shows that economies are fairly strong in some places, but what traders do now, if they're buying Bitcoin, is looking 12 or 18 months ahead and saying, what will the landscape look like in 12 to 18 months? And a lot of this data is showing what that will be. And so you're buying Bitcoin now for that. The first one is the yield curve inversion that happened in the bond market. It usually takes, in previous cycles, around 10 to 12 months, as you can see here, for the unemployment rate to actually start rising higher. Now, sometimes it doesn't rise higher, although a lot of the time, the majority of the time it does. You can see this is the current yield inversion that we've got, with unemployment actually going down during this time. But we are going to, within the next few months, potentially see if unemployment will start to rise significantly higher, or the extent to which that happens. So that's obviously something important that traders are now looking forward and saying, actually, conditions will probably be a lot weaker in 6 to 12 months. And so they're making buying decisions, because as economic conditions get weaker, central bank policy gets a little bit more dovish. So that's what they're buying into right now. This is also jobless claims. You can see we are at the very, very bottom of a cycle right here. However, it seems to be a start of a trend where jobless claims are just starting to tick higher. And as economic data comes in, and as rates are still at 5% and not moving anywhere for a while, this may start to tick up. This is actually exactly what the Fed wants to see. This is why they raised rates and became very hawkish in order to raise unemployment. This is specifically what they're trying to do, and they will get it done. They'll have rates there until unemployment starts to become a big issue for them. We're also seeing bankruptcy filings at levels not seen since 2008, which is obviously a scary thing for the economy. So 2008 levels here, 2020 pandemic levels, we're up at similar point right now. So this is not great news. This is not great news for the economy. We don't have a strong economy right here. We have bankruptcy filings at near all-time highs. Not great. But the feed through from traders is they see a weakening economy. They see massive losses within the economy, maybe commercial real estate as well. Eventually, those losses go into the banks. The banks cannot be allowed to fail because they are now public-private partnerships since 2008. The government pumps them with liquidity and money to offset losses. This is the BTFP, which is the facility that the government gave to the banks to let them sell all of their government assets, their bonds, back to the government at par, even though they're not valued at par right now. This is because the government can't let the banks fail because then everything falls away. What this really means is, where are you getting the money from? Potentially more currency debasement, liquidity getting pumped into markets through the reverse repo and things like that. Liquidity pumping into markets, money printing, if it comes, is going to push asset prices up. It's not really great news, but you have to play that game. Is the currency is getting debased, you need to be in something that's going to go up in value in relation to that. Stocks or Bitcoin or gold, whatever you may feel. If you're in crypto, then obviously you're thinking Bitcoin and crypto. All of this information is flowing into the reason why Bitcoin is up 100% this year now. The cycle is turning. We don't know the extent of the weakness, but traders are making those bets. Also, the first time ever that TradFi is really attempting to bring this industry into the mainstream. Those two things are major in my opinion. Whether we have to wait for the halving next year and we kind of, go through the bottom of this range, or whether ETFs actually get approved early and we get a big pump and then maybe another dump and then a rise up. We don't know that, but that's arguing about the time horizon rather than the destination, which I think is becoming clearer at this point. Anyway, if you're a trader, get your deposit bonus on Bybit up to 30K, link in description for that. Check out the Crypto Investor course if you're interested as well, 300 videos and private Discord groups. Come and ask me questions as well, link in description. I'm James with Money's EG. Cheers for watching and I'll see you in the next one.